I don't say this to be nice. We didn't plan for tomorrow to come up so early. Today, XRP went from being just a guess to being a much more dangerous thing. Capital for production. And once that line is crossed, price, time, and patience will never be the same again. Hey everyone, welcome back. I hope this message finds you well. If you like what you're seeing, click the thumbs up button and subscribe if you haven't already. Now let's get to it, because what I'm about to show you shouldn't be going this fast. In the past, this kind of change took years. Whole market cycles. Regulatory back and forth that never ends. Rather, we're seeing it happen over many months, in peace, in a planned way. And most people still think XRP is just another token that needs its price to go up. This change makes everything different. The XRP ledger is working on a method for lending at the protocol level. Take that in. Not a DeFi tool stuck on top. Not a test by a third party. This is native, on the book, ruled by validators, loans with set terms and rates, option, not protected, 30 to 180-day terms. And the most important fact that not many people are talking about, using single asset prices to separate risks. Defaults do not spread. No, that's not secret logic. That's how banks think. This is how business credit looks when it's set up correctly. In other words, it turns XRP from something you bet on into something you use. Everything changes when you change the yield. When yield is present, price gets a flaw. Flaws change stories. Narratives bring in money. And capital doesn't wait for the January 2026 votes of the validators. Markets try to avoid what will happen. In light of this, what we see now is very important. Fear is high in the market as a whole, and the news is full of reports of chaos. However, XRP quietly received nearly $63 million in ETF gains in just one day. The Bitcoin was red, Ethereum was a bright red color, XRP wasn't. That's not store excitement, it's called reallocation. It's not smart to chase green candles with your money. It goes there before repairs to the structure. The place where most people go wrong is here. They are obsessed with daily price changes and miss the setting phase completely. Just that broke everyone's hopes. The smaller number is more important though. Ripple's on-demand funding is moving $15 billion in payments. This is no longer an idea. There are more than 300 banks in 55 different countries. 40% are actually using XRP, not just for chatting, to settle transactions. Cross-border payments made through ODL were $15 billion in 2024, which is 32% more than the previous year. 56% of that amount came from Asia Pacific. There are now more than 70 live corridor pairs, which cover about 80% of the world's money transfer paths. Adoption is not what you see coming. That's already up and running technology. Active XRPL addresses rose 142% in the first quarter of 2025. Daily deals went over 2 million. Price comes after usage, has always, just not very often, on the time people want. While all of this is going on, something else quietly drops that should end the discussion for good. It is now said that Ripple is in the final stages of talks for an IPO in 2026. If your numbers are weak, you shouldn't go public. If your business hasn't been through a lot of tough times, you don't want that much attention. An IPO doesn't just set the price of Ripple, it also makes the prices of everything related to it clear, including XRP. Models are the most important thing to institutions. Once Ripple's value is known to the public, analysts can finally make models of its income, payment volume, token usefulness, and balance sheet exposure. Ambiguity makes things less valuable. Clarity changes the prices, and once those types are made, prices will stop going down. Then there's RLSD, which is Ripple's stablecoin for the US dollar. Expanding multi-chain in a quiet way, layer 2s of Ethereum. Having hope, base, no rules. Unique. All linked by a tunnel. Not wrapped nonsense, but native cross-chain moving. The rails have already been built, but the NYDFS has not yet given its permission. When cash is needed, stablecoins don't grow. The desire for a settlement doesn't wait for everyone to understand. RLUSD keeps the flow going. It's over with the XRP system. Looking at the market as a whole, not much has moved during the day. Bitcoin is just above $90,000. Ethereum getting back $3,000. XRP is staying put around $2, giving people the creeps like a bad guy. The market value is now back over $3 trillion. There is still fear and greed, but fear is stronger. I get it. 2025 hasn't been the exciting year everyone was hoping for, but this hasn't happened yet. Shaking up. Bitcoin's lead hasn't changed hands. A lot of altcoins run when it does. XRP has a history of moving slowly. It also doesn't ask for permission to move. A new all-time high in 2026 is definitely possible if XRP stays in this area and doesn't fall even further. There will be stimulus. Tax reports are on the way. There are always speculations where liquidity can go. It then goes after things that have already gone from being ideas to being built. That's because what you're seeing now is not a map. There's been a change from risky capital to useful capital, from story to necessity. And prices don't move slowly after financial systems cross that line. That's it. Now that we know that, let's jump right into the next part of this shift. Because what's happening below the top is much bigger than anything we've talked about so far. Why is this moment so hard for people to deal with? It doesn't look intense yet. There isn't a happy blow-off top, screaming green candles, or media chaos. It looks dull instead. Technical, too bureaucratic. And that's how real changes in systems always start. Changes in the financial system don't happen on Twitter. Instead, they happen slowly, under fluorescent lights, in boardrooms and regulatory frameworks. This is where XRP now lives. The market is still trying to figure out how much XRP is worth, as if it were a high beta speculative asset whose value depends only on how people feel about it. But the behavior that's going on below the surface doesn't fit that category anymore. Volatility doesn't go away when an asset starts to anchor settlement flows, credit structures, and liquidity routing. It just changes what it does. Price is less about fun and more about how much you can buy. With this network, how much value is it safe to send? How much money can it move around without any problems? The question of how high it can pump is not the same thing at all. Take a step back and look at the lending procedure on the XRP ledger. Fixed-term, fixed-rate loans controlled by validators are not made for individuals who are looking for yield. It's made for balance sheets, banks, and other places that need stability rather than excitement. And the choice to separate risk at the level of a single asset is very important. Just by that choice, you can tell who this method is meant for. Banks do not like spreading risk. Cascading mistakes are not okay with regulators. This design plans for both of them. XRP is no longer idle cash once lending is possible at the protocol level. It is natural for idle cash to be risky. Capital that is put to use is useful. Capital that is productive needs to return, be efficient, and be reliable. That's why this change is more important than any ETF news. Demand is backed up by ETFs. Loan programs check for usefulness. And usefulness has a funny way of making prices change even if the market doesn't want to. Add that to what's already going on with funds across borders. $15 billion in yearly flow isn't enough to prove a point. It's about size. At that level, waste costs a lot of money very quickly. It matters every basis point. How fast you settle matters. Depth of liquidity is important. The role of XRP here is not abstract. It works by itself. It frees up cash that is stuck. It cuts down on the need for pre-funding. It cuts the time it takes to settle from days to seconds. Those are not perks of crypto. Those are changes to the balance sheet. This is why institutions quietly move things around when people are scared. A long-term player builds a position out of fear. These people don't try to guess which ticket will be popular next week. They are figuring out which networks will still be useful when digital lines make capital markets more stable. XRP keeps coming up in those figures, not because it's cool, but because it works with the rules that institutions have to follow. One of these limits is regulation, and this is another place where the story doesn't match up with reality. For many years, XRP was seen as being slowed down by rules. In fact, it was changing because of it. The same clarity that made things slow and annoying for small investors was exactly what big investors needed before they committed real money. On a large scale, markets don't like doubt. They punish it. Take a look at where we are. ETFs go away. The ODL volume is going up. A native loan layer is being built. It is not hoped for that a stablecoin will grow across chains while legal approval is still being sought. On top of that, there were honest talks about an IPO. There is a pushing function in an IPO. It clears up confusion. When Ripple's value is made public, the market can't act like it doesn't know how to judge the community that supports it. Costs are estimated, revenues are made public, and growth paths are compared. All of a sudden, XRP isn't floating in story space anymore. It's tied to economic action that can be measured. That doesn't turn XRP into a stock. It means the fog goes away. That's not how repricing works when the fog clears. This is also why it's not useful to compare XRP's path to previous crypto cycles. In past cycles, infrastructure came after price. After speculation, projects raised money, which drove up values. This time, the equipment is the first to arrive. First, use is growing. First, capital markets are coming together. It's not the other way around. Price is behind the basics. People who are used to getting things quickly find that reversal awkward. But that's exactly what you'd expect if digital assets are growing up to be payment systems instead of gambling chips. Getting back to RLUSD, the multi-chain growth is another sign that most people get wrong. It's not about competing with other stablecoins for use in stores. It has to do with managing cash. When value needs to move quickly between systems, stablecoins make it possible. Ripple is building a liquidity mesh by placing RLUSD across major layer 2s and letting it settle through the XRP record. Value goes where it's needed to go. It stays where it can get there quickly and cheaply. That's not a mistake in the planning. That's how systems think. And thinking about systems is what makes platforms last and not just spike and fade. Eventually, markets will reward designs that make it easier for things to work together across many layers. Credit, payments, settlement, and following the rules. Even though the price chart doesn't show much, XRP keeps checking those boxes, which brings us back to the behavior of the market as a whole. The lead hasn't changed hands yet with Bitcoin. That's important. In the past, major altcoin runs didn't start until Bitcoin's move was over and investors looked for higher beta elsewhere. XRP has often been slow to move during these cycles, which is annoying for holders until it finally does move. But this time is different. XRP is getting money even though it hasn't fully rotated yet. Not a city of happiness. Capital for strategy, the kind that stays put when things get rough because it's tied to bigger ideas for the long run. Holding on to important fundamental levels is more important than trying to catch short-term gains. If XRP can stay in its range while factors keep getting stronger, pressure will build. Pressure builds up. And finally, the pressure goes away. Not because of a lot of hype, but because the market has no more reasons to price it like a question mark. All of these things don't promise a straight set. The market doesn't work like that. But it does change how the odds are spread out. It gets harder to formally justify downside. It gets easier to model upside. Price moves faster than anyone thinks it will when enough people come to the same conclusion on their own. This is the real way that changes happen. Not with fireworks at the start, but with quiet switches being flipped behind the scenes. Loan rails are now live. Payment amount changes. Regulatory clarity gets worse. Valuations can be seen. The market then almost instantly figures out it had been looking at the wrong thing the whole time, due to the fact that the repricing has already started by the time there is agreement. Now that we know what's going on, the next thing we need to look at is how capital acts when an object is no longer seen as speculative, and why the most violent moves tend to happen during that time. This is not advice about money. This part is something that most people don't think about because it's clear after the fact. Capital doesn't just pour in when an object goes from being a speculative investment to a useful one. It acts differently. Time horizons get longer. Volatility gets smaller before it gets bigger. Weak hands go away, not because they are scared, but because they are bored. After months of looking at the charts, when price finally moves, it doesn't seem to have anything to do with the charts. This is where XRP is going right now. Believe is what gives speculative goods their value. Throughput is used to value productive goods. How much value can they move around? How quickly and well can they do it? How well do they work when they're under a lot of stress? What will happen next once those questions are answered? Right now, there is no longer a hype loop. You have to do with allocating cash. That's why the way the XRP market is acting right now seems so odd. There is no madness or despair. There is only quiet concentration. Flows into ETFs on red days. Institutions are getting more involved, but regular people aren't really interested. Instead of exploding, prices stay in bands. Traders who don't like to wait see that as weakness. Long-term capital sees it as building work, and the building process always seems slow until the job is done. Something strong but not obvious happens when lending, payments, and stablecoin liquidity all come together on a single settlement layer. It gets harder to replace XRP. There is no longer any choice. It costs more to switch. When a system is already part of how an institution works, they don't just take it out because the price dropped by a quarter or two. That's not how the system for handling money works. In this same spot, the claim that XRP is centralized quietly falls apart under its own weight. Institutions don't accept systems even when they are governed. They follow them because there is government. Validator voting, isolating risks, and rules at the protocol level are not flaws. They are necessary. They're what separate experimenting from making things, and production methods don't change prices little by little. They change the prices in stages. Think about how things change in value once there is no longer any doubt about them. An IPO, a court decision, a merger announcement, or an approval from the government. The price doesn't slowly go up over time. It has holes, it jumps, it starts over with a new line. After the fact, people argue about whether it was clear when it looked back. That's the moment that XRP is getting close to. The talk about Ripple's IPO is important not because it's exciting, but because it pushes people to work together. All of these things, private valuations, public statements, and analyst models, turn guesswork into facts. And capital doesn't fight about feelings once numbers are there. It takes advantage of waste. If the value of XRP's usefulness, volume, and part and settlement is off compared to Ripple's worth and payment flows, the market fixes the problem, not kindly. This is why it's so hard to time these moves. Prices don't go down the most when everyone agrees. They happen when enough people independently come to the same opinion and decide to act without waiting for confirmation. That's when there is less cash. The price changes faster than the stories can keep up as bids pile up. When global liquidity comes back into the picture, things become even less even. The stimulus doesn't care about stories. People who get tax returns don't read white papers. Liquidity flows into assets that can be moved and seem undervalued compared to what people think their future role will be. That's why changes in the late cycle feel like a mess. Capital doesn't wait. It's a matter of timing. And XRP is in a strange but strong place in this situation. It's thin enough to soak up size. It's regulated enough that it's okay. It is dull enough to not care about it. Until it's not. In the past, XRP's biggest moves have happened when people were least sure about it and their attention was on other things. Not at the height of optimism, but when you don't believe it. When holders were used up. When experts said it was a waste of money. Conditions are quietly coming together again, but this time there is one important difference. The fundamentals are 1,000,000 times stronger. XRP was a promise back then. It is now a pipe. Pipelines don't need a lot of fuss. They only need flow. And valuation happens whether people like it or not once flow reaches a certain level. There are times when markets can ignore reality, but not all the time. Even less so when that truth is shown in balance sheets, settlement amounts, and audited disclosures. In light of this moment feels heavier than cycles past. In this case, it's not just about the price. It has to do with completing a role. This is no longer an audition for XRP. The die has already been cast. Only how long it takes for the market to fully understand that shift is still unknown. Here is the truth that makes you feel bad. Most of the time, the opportunity phase is over by the time there is consensus. There is no longer any easy asymmetry. Risk-reward gets squeezed. What was once a debate is now taken for granted. That's when people say, "I knew," even though what they did showed otherwise. There is no such thing as a green candle tomorrow. It means a change in classification from a risky asset to a useful capital asset, from an option to a planned allocation, and from a story to a need. You can't play the tape back after crossing that line.